that is our subject today. So trading, trading's hard and this is educational. That's the bottom line about the disclosure. Please read it. Thank you. Thank you, Andreas. So please, read it to yourself, and we're teaching concepts. That's really the bottom line, and they're completely immediately adaptable to real life trading, but there's no magic. There's no, we're not going to sell you an indicator that's going to tell you when to buy and when to sell and that kind of stuff. So anywho, all right. This is our agenda for today. I want to do a couple of things right up front. The first one being just kind of set the tone for who's here and what we're trying to accomplish, because this topic, there's people here that went through the workshop that we did in the end of 2019, and they've heard some of this material, but they also have some of it wrong, I've noticed by their posts, and some of them are also just kind of learning it. So some of them have it perfectly right. So that's kind of one audience. And then there's people that are new, that are just joining us at TRG, and that's probably at least half of you. So I'm going to kind of come in as if you've never heard this before. And if you have, use that old standard tabula rasa we like to talk about here. Act like your mind is empty. And this will be easier to understand. Don't try to, what I mean by that is don't try to frame it in your technical analysis or logical kind of mind. Just kind of listen to the point and go with the flow and see where it takes you. So that's the audience question. Okay, success loop and research. I clipped a couple of other things out of here, out of some other presentations, just so this would go relatively fast. And so that way, I want to just go back to this. Now, this was something that I had in a previous presentation, and there is no prerequisite for this one. So I'm sorry, I'm ACT. Okay, not sure what that is. If there's a technical problem, let me know. I see ACT question mark. Anyway, so this was in a previous presentation, and it's a really good kind of 10,000 foot view to look at how successful trading really works. There's no magic, there's no magical indicators, there's no guru that knows the right time to buy and sell. Oh, got it. Thank you. I get it, Jack. All right. So, yeah, you know what? Role playing, if you can't do it, act like you could do it. That's how you learn to do something. And I'm going to talk about that. That was a great segue. Thank you. So this is a really good part of that. If you build a process and you just logically follow it consistently, then one of two things is going to happen. If the playbook of setups you're trading are profitable, then you're going to make money over time. And if they're not, you're not. So it's really that simple. And so I'm going to go through what each of these things are. What's a playbook? What's a setup? What are some setups? And that we're going to spend most of the time on two groups of setups that we do pretty regularly here. You've heard us referring to them, the open 5 A and B, and the first hour high and low, or the initial balance. So that's where we're going to spend most of our time, but I just wanted to kind of put the terms in a structure. Playbook is kind of the top. Setups are inside the playbook. We execute against them. Feedback, journaling is kind of the way to finish off, log it, go back and do it again. So I have a very, very specific process that the workshop guys they're probably ready to, they've seen this a lot of times, put it this way, and it does change over time. I actually just made a couple of changes, but this is what we're talking about when we talk about a process. So let's step all the way back. Too many traders sit down to trade, and the only thing they're thinking about is, oh, what's going on with the prices, and what did Trump say today, and yada, yada, yada. And you know what? That might work sometime, but unless you're really skilled, your human being, the monkey's always going to catch up with you, the lizard, call it whatever you want, lizard brain, the monkey on your back. You have to find a way to manage yourself. This is about discipline. So that's what I'm talking about back here when I'm showing you process. This is a way to come into the market every time you do it, whether it's every day or you come in, you trade for a couple hours, you leave, you come back. This is always my way of kind of putting on my trading thinking cap, if you will. I don't know if that translates, but anyway, I kind of come in and just make sure I'm ready to trade. Am I competent and humble? I've been doing this 47 years, and I will tell you without a doubt, the most likely day I am to lose money is the day after I had a good day. And if you trade it for any length of time, I know that that will resonate with you. You have a good day, you're the master of the universe, and the next thing you know, you have the biggest loss of your life. Well, I've done that many times. So it's really about just getting a handle on yourself. And so, and everybody has different issues. So one of the things we spent a lot of time doing in the workshop was kind of helping people design their own processes, and you'll see those shared. And in fact, there's a channel just for that. How about that? And I'm going to kind of point back to the Slack because folks have asked to be educated on how the Slack works. Well, the place to share your processes and get feedback is Process Shares. And we will post masters and kind of the overview in this Process Masters. So just a quick reference there. So anyway, the other thing, I just kind of put it into a context of life too. Am I eating the right things? Am I exercising? That sounds, oh yeah, well, of course. But guess what? When you're trading poorly, that's the first thing to go. I'll run tomorrow. I'm going to sit here and make this loss back up. I mean, I know everything I'm saying is resonating because that's what real traders go through. And if someone tells you that they didn't go through that, or that they're not going through that, then they're not really doing it. That they're selling, a magic box indicator like, what's his name, E-mini Vinny or whatever. People, there's so much garbage out there. That whole Twitter is just covered with gurus selling garbage. We don't do that here. We talk about how you can consistently make money. So you need a process, step one. I like to have a mission. I'm in the process of building some scalping tools. I wouldn't call them algos, but bots. And so right now I'm focused on scalping, but that's not all that I do. So I just want to make sure I make that point because I know a lot of people just don't have the energy or the personality for scalping. So anyway, let's kind of look at the meat and potatoes here and then focus on one or two items. Now, the context, this part over here, so kind of sort of highlighted it. This part is, so I kind of come in and I say, all right, am I physically even ready to trade? Yes, I am. Okay. What's the context of the market? I give myself about 5 minutes and I just take a look at what's going on. And I do this with everybody together on Mondays. That's what the Motley Ides of Monday warm-up thing is about. But, I'll shoot through it real quick. Again, this is a lot of material for an hour and a half. I don't want to get stuck in this stuff. I want to actually use process setup examples. So if this seems like I'm going kind of quickly through this side of it, I am. So we'll come back to it over time. I promise you. So anyway, context, what's going on? Is there a trend day brewing? On the overnight, we were up. So, today, was there a trend day brewing? Here's an 8-minute chart. This is the overnight over here. And then that's the high and low, the first hour. So there was definitely a strong momentum up. It didn't go anywhere once we got open, but you could look at that either way. A flip is when it does this overnight and then it rolls over. And that's kind of what we got, although it wasn't a real aggressive flip. That is another setup I won't talk about too much, but it occurs when you get a big run up and then the second we open, it just gets dumped down. And we usually end up at least back where we started. So, and that, I mean, through the whole overnight and back at the previous close. So, that's not what we have, but trend day brewing flip, it's always good to kind of get a mindset around what's going on, not to get biased, but just to put it into context again. What's the structure of the profile? Again, I'm talking about volume profile. So I'm just looking, we have symmetry and a real nice shape since we opened, but overnight is a double distribution, big one down here, big up here. So far, we're respecting this one. So that's what I'm looking at when I look at profile structure. And so, you should at this point be getting the idea. I'm just getting a 10,000 foot view of what's going on. And are there any boundary prices I like? Yeah, it'd be real cool if we blew through this and started heading down as fast as we came up during the night. That would be a interesting short, et cetera, et cetera. So I'm looking to collect info. I'm looking at the difference between the delta, that's the cumulative delta, the bar by bar delta, and each event's impact on price. Let me go grab another chart. That one I minimized and I didn't want to. Let me put that back for a second. And I'm trying to kind of give you examples on the fly just so you can kind of keep up. I'm not trying to really go into depth here. So please understand that. So anyway, this is a very, very fast chart, and I scalp off of these, and I'm doing wave volume. So these are the volumes of the swings that you're seeing. And I'm also looking at the delta down here. So that's what I'm talking about. You know, if the delta is going one way and then it suddenly has an impact on price, that's something I want to see. So price was coming down, we were on the sell side, and you know, this is a reasonably high volume reversal. And since then, we've been kind of meandering up. So that's what I mean. You know, are there events like that where we're turning? Those are good to keep in mind. Again, notice how I'm not talking about anything with rules or predefined, you know, step 1, step 2, step 3, you know, when the XYZ crosses the ZYX on a 30-minute chart after 11 o'clock on a Thursday, it's long. I'm here to tell you also that that is nonsense. Those kinds of technical setups haven't worked for at least a decade. They're too easy to game. Now, that doesn't mean that you can't use technical tools as tools, but simple mechanical technical setups, XYZ crossing M, pivot this, support that, you know, any of those things, they just don't work consistently because they're looking backwards. They're not looking at what's going on in the moment, and that's what matters. That's what's critical. So, you know, I kind of look at a few other things. You know, I'm looking to go with breakouts, fade extremes. We'll talk a lot more about that on footprint charts. You know, if you're not sure what's going on or if it's consolidating, don't do anything. Sit on your hands. That's kind of what's happening right now. You know, if I look at this is 8 minutes is probably a weird time frame for you guys. So let's put it at 5 minutes. I did that just so I could see the last couple of days on a smaller box. I had it zoomed down. So here we go. So this is yesterday's opening range and yesterday's volume profile. Here's that big overnight move. We've seen a lot of these both directions. You know, there's the double distribution. And now, you know, we're totally in a consolidation. So, you know, other than scalps of the tape, there are no good trades when we're doing that. But look at the first hour low, how great a tradable signal that was. That just happens literally almost every day, not the low or the high, but that there's signals like that. Here's another one back here. Here's a consolidation on it yesterday that turned out to be a real good chance to get in for another move after the move up to it. So that's what I'm going to show you later when we talk more about setups in the tail end, the second half of this. But what I'm trying to do now is just give you this context. What's this document about? And then understand that this time of day, TOD is time of day, and this is my time zone. I believe Kevin was kind enough to create a template of this in the Slack for us, and I think he shared that here. And there it is, yeah. So you can get your own copy, and I think he's put it in Eastern or lets you put it in whatever time zone you want. So anyway, this is my playbook here. So that is this chunk that I just highlighted. And basically what the playbook allows me to do is allows me to take the conditions in the market. Again, notice how I'm talking about the market is telling me what to do. I'm not looking for some predefined technical arrangement based on some historical prices. I'm looking at certain times of the day. I want to watch the behavior. And based on that behavior, I'm going to see trades. And those trades tend to fall into a couple of different types of setups. So that's what we're talking about. Playbook, kind of context for the playbook, and then specific setups, you know, and these are them. I also put a list up here of the kind of groups they fall into for me, and that is right, where did I stick that? I thought I did it here. Okay. Where did I put that? Darn. Oh, there it is. Looking right at it. Okay, so I pasted it right on here. So these are the setups here. And then over here in the playbook, I have them in the context of the different times of the day. So you can refer back to this document. It's up on the Slack. The ones we're going to talk about today are the open 5. We're going to mention HMOMO a little bit and the first hour high and low. And you can see they kind of fit into the playbook. So that's where we're going to spend time. But understand there's 8 of them that I use regularly. I'm also developing 2 new ones right now. So this is a dynamic thing, which is kind of another point that we make here at TRG. You're constantly should be optimizing your tools, your platform, your trading tools, the mechanical things, this stuff, Jigsaw or whatever it is that you're using. And then the second thing you want to do is constantly be improving your setups and discovering new ones by watching the behavior of the markets that you trade. And every setup we're going to talk about ever of mine is not based on back testing. It's based on live testing in real trades with real money in the market. I do not believe in back testing. I think it gets you in the ballpark, but it's dangerous. It's really dangerous. It's like technical analysis. It makes you think something is truer than it is, and it creates confirmation bias. So I'm constantly looking to improve and constantly testing. So that's where these results come from. And that's how, there was a perfect example this morning. I posted it on Facebook, and I think I posted it in Slack as well, that, here's this thing I've been working on. I love trading overnights, but managing risk in overnights is a pain in the ass, pardon my French. And so this is a new little multi-lot. It goes 0 to 5. It goes with any instrument I trade, and it's a scalping model that I'm building. And you'll hear me use that term a lot, model. That's a setup. A model is a setup. That's interchangeable. So I don't mean to be confusing there. All right, so that's kind of, again, the 10,000-foot view. Right now, this time of day, it's what's called the rookie roast. That's what RR is here, is the rookie roast. Let me make this a little bit bigger. So this time of day is the rookie roast. And that's an old pit term, but basically it's, unless absent anything significant happening, it's a time that algorithms and large traders can push the price around and trade their books and just kind of trade the ebb and flow on the dome. And if you're good at that, you can too, but it's easy to get chopped up. So I recommend, really, really good setups only. We refer to those as ace king. That's what AK is, ace king. It's a Texas Hold'em example, metaphor, analogy, depending on how you want to use it. And I'll come back to that one over time as well. But it's just a way of rating the quality of a set. So let's say you're looking at a first hour high or first hour low setup. Some are better than others. So you look for the better ones, not the crappy ones. You don't want a pair of jacks. You want aces and kings, aces, pair of kings. And I'll give you an example of how you determine that. And that's really the rules. Those of you that were asking me about, how do I have rules in the setups? They're really not rules. It's a quality assessment. You're gaming the odds. And that's how you do this well. And at least that's how I've done it for 47 years. As of next month, God, that's scary. I gotta tell you, it's really scary. All right, I'm gonna pause here. Can I share the new model, Jerry? Yeah, of course. That's why I'm here, but I'm working on it, so I'll let you know. It's more than half a century, John. Anyway, all right, so we're gonna pause there for a second. And I'm just gonna go back to the agenda. So that was the playbook overview that I just did. And this success loop research thing that I was talking about is, where did I put that? That should be this. Whoops, no, that we want to come back to that one too. Oh, it is. This is part, you know what, I'm going to pause for a second here before I go. This is what I was talking about, and this constantly evaluating your setups and looping through this. But before I go back to that, I'm going to pause here and take questions. So let me put this back up and let's see what we have in the question boxes. Let's see. You were trading with the tape. Yes, you know what? That's one of the things, Anita, that you'll see throughout my playbooks and my comments is this hierarchy right here. Technical picture, auction structure, order flow. And you can add one more to that. It's news, okay? And news would be the next one. So basically you always want to be trading the most granular events, the absolute fastest time frames, the most specific you can be. And that doesn't mean, you trade off a 15-second chart, but the dome is what's happening real time. And this is what's been happening real time most recently, which is what's important. You'll hear a lot of gurus telling you that, what's really important is the 5-hour chart or the 15-week chart or the 75-year chart or whatever. And those are, you can find one of those that will tell you whatever you want to know. That's the problem with those. So, okay, here's a range chart. Wait a minute, that's not it. I didn't want that. Let me grab my, okay, so here is my range view of the ES, and it'll tell you, well, sell here, and buy here. Every time it manages to get that right, but that's because it's a range chart. So charts can be a really deceptive, and Lee made a really good point when he said in his presentation on Saturday that they're always wrong, and there's nothing truer than that. So it's really important to not look at anything that way and always look at the now, and that's why domes are so useful, particularly ones like the jigsaw ones here that aren't just domes, but they're depth and sales too. So I'm going to come back to this after I talk a little bit more about the structure of these setups we're watching, and that's going to be a perfect time. That'll split us right in the middle, and then I want to actually do a half an hour of examples. So anyway, we'll just kind of watch this as we're talking. And what I'm going to do is, depending on the instrument, some of them I will let them accumulate. Some of them, like for the NASDAQ, keeping the prints of all the trades gets kind of messy because it moves around so much. Although, see, it sometimes is really useful. You can see it building a little battle level here. So, as the trades go by, and now it's selling off from that little spot. So, so I like to leave the old actual trades on there, and they're much more valuable than the orders, which is what this is. So anyway, we'll come back to that, but I want to do more kind of definition here before we do that. All right, so we understand what a playbook is. We understand what setups are. If there's any other questions, put them on the chat. I will keep an eye on that as we go. To do this well, and I touched on this a minute ago, this idea of having a tabula rasa, a blank slate, totally clearing your mind. For this kind of stuff to make sense, I find for anything in trading to make sense, this is a kind of an exercise to help you compartmentalize, and it's also a learning how to learn exercise. And I'll tell you what, if the only thing you ever do that I suggest is read this book right here, The Art of Learning, then I will have succeeded in helping you with anything you try to do. It's that good a book. So you got to read this book if you haven't. But anyway, what I'm talking about here is a technique Josh talks about, but I learned it actually in track and field in high school, and I ran at UCLA. I was a sprinter, and one of the things my coaches always used to say to me, when we're training, we have to think a little further out, the championships and next year. And so, our brains can be down here. But, when you're getting into the starting blocks, you got to get really right here. And you need to put your mind in, what's happening in the next 2 seconds. And so I find this an easy way to just frame this. Anytime I want to focus, I just say to myself, okay, what am I doing right now, and how is it relevant to me? And right now, where you should be listening to me talk about this is probably relevant for you down in here. So try to put what's going on in the market out of your mind, and kind of what happened this morning, and whether you made or lost money out of your mind, and where you're going for lunch, and where you're meeting your wife or your husband or whatever, or when the kids get home from school, and think about your trading career. Think about it. We call this your general manager, your personal general manager. If you were managing you and you were giving yourself a performance review, that kind of mindset. So how can I improve my trading over the next couple of months? And in order to do that, this setup is really useful. And in fact, it falls into the category that several of the setups that I like to do fall into, which is you can actually make a living trading just the open 5 or just the first hour high and low. And the other one I would say that about is springs and up thrusts. HMOMO is a scalper's setup, so that one's sort of true too. But literally, if you just look at the open 5 A and B, which we're going to talk about in a minute, or the first hour high and low A and B, there's kind of not really an A and B there, but I'll address that because somebody asked me about that. But if you look at the first hour high and low, you look at the open 5 A and B, and you look at springs and up thrusts, any one of those could be a trading career all by itself. You don't have to learn any other setup. So with that in mind, Anita, let's focus on the specific setups, and let's kind of get in okay, for the next 2 minutes, I really want to try to understand what Jeff's saying. And assume I'm an idiot, assume I know nothing, and an idiot in the clinical sense, literally assume you know nothing. And I do this every time I try to learn something. I find it to be really useful. So we're going to talk about two groups of setups. The open five, which is actually two different parts of the same thing. So one of the things I learned in the workshop was that. I used to just call it the open five. My students taught me that, no, you know what, Jeff, there's two different setups there. But since it's based on the same logic, I broke it into the 5A and the 5B. One is very much a scalping and momentum setup, and the other one is kind of a trading the pullbacks and breakout setup. So it's more of a wait mode. And when you see me using these terms, this is just two modes I put all of my setups into categories, and the scalp setups are the ones that are just automatically a scalp, and they happen really fast, and everything's a scalp until it proves otherwise. And so those are the ones in green here, and then the blue ones are kind of the wait ones, and there's a few that kind of end up in both, and so we're going to talk about that. So that's what that is. The first hour high and low is definitely a wait setup, simply by virtue of the fact that you have to wait for the first hour to do it. So, literally it's that complicated. As much education as I have and as much years I've been doing this, I try to make things ridiculously simple. That's one of my, also one of my process things that I actually did learn directly from Steve Jobs. So, and I'm not lying about that. And that's this thing right here. Making something simple is really hard, but that's what we're doing right now. So we're going to look at these two setups, the open 5, A and B, and the first hour high and low. Okay? So those are the ones we're going to do over the next half an hour. I'm going to go through them and explain them from the point of view as if I was just explaining it, quote unquote, to a 3-year-old. Not as if any of you are 3-year-olds, but if you think about it this way, okay? If you think about it this way, you'll find that that's an easy way to understand the big picture of the setup. Now, that doesn't mean that it's literally just that simple, and if you just do that, you'll make money every time. But it will give you the tools to interpret the setup properly. And remember, I'm a discretionary trader, as you should all be. Yes, you can use algorithms. Yes, you can use automated trading for specific setups. But there's just no such thing as a computer you turn on that reads the market and knows what to do. Not yet. We're getting there. Right now, the best you can get is look at the conditions and turn on the appropriate setups. And that's what Lee does, and that's what I do. So that's what we're all about. Okay. So with no further ado, let's jump into the setup. So first, let's just talk about the Open 5A. And the Open 5A can be really confusing. And I don't mean it to be. There's a definition of it in the channel if you go look at Slack. So, and I want to shout out to, let's see, Marcus, welcome. I understand you joined just for this session. So Lee says hello and I say hello. I just saw your name on the list. Welcome. Anyway, so here's a 15-second chart, and I'm going to put this up at this fast of an interval because, again, we're looking at the very open, and sometimes even 15 seconds is too slow. I'll go to 5 or 10 seconds. And the reason is I don't trade off this. I'm trading off the dome, but I'm going to show you the chart just so you get an idea of what the Open 5A feels like. Okay, so put your trader hat on for a second, and just imagine that you're sitting at your computer and the bell just went off on regular trading hours in New York. Okay, that's the time frame I'm using here. Now, I want to make sure I don't confuse everybody with that. So let's go back here and look. Okay, on my chart, it says 6:30. I'm in California, USA, 3 hours earlier. So that's 9:30 New York. That's when the New York exchange opens, or 8:30. If you're in Chicago, that's, now you get it. Okay, so adjust to your time frame. But I will always refer to time frames in my time frame. I just found that was much easier than standardizing on the New York or the Chicago or anywhere else. So indulge me. I'm old. There's a great routine George Carlin did about what you can get away with when you're old. Who are you people and where is my horse? Anyway, so this is the top right here of the first hour high. It also was the opening 5-minute high. So the overnight is in here, okay? And then we opened, you can see right at 6:30, and then the market tried to go up a little bit. And then, so this, if this line hadn't also been the first hour, it would be pink like this one, and it would represent the first 5 minutes. So that's the top here to here. So what you can see, if you look at this, is just the energy of that. That's what the open 5 is about. And in addition to that energy, is it going one way or the other? How is the delta, which was heavily on the sell side affecting price? It was pulling it down. Every rotation was further and harder down. So if you were seeing this, and again, if I'm trading this, I'm not watching it here. This is over on my left-hand portrait monitor, but I'm seeing it in the dome. I would have been seeing just, every attempt to lift up getting sold. And, what does that look like? Let's just kind of scroll back. You could even have this next to your dome. You can see these little tiny pushes up are just, they're not getting anywhere and it's pushing down. So that was the bottom of the opening 5 minutes right there. And that open 5A is just a grab the momentum of that particular time interval, and there's a reason why that time interval, and go with it. You never go against it. It's always with the order flow. There's no rules again, but I know a lot of you are brought up on rules, so I'll try to give you the closest things we've got and then show you a bunch more examples. And I'm even going down to 5 seconds now. I mean, that's how quickly this trade will unfold. And that's why the dome is the ideal place to see it. But if you must look at a chart, this is what you want to look for. Okay, let's see. So, all right, so there's the open right here. And so, literally that's 6:30 right there. Okay, so we open right here, and then, we did this little shimmy. You often see that. I call that the head fake. And I'll let it do that, and then I'll see if it picks a direction. If it does this and comes up to an area that was some sort of previous high, that's always an opportunity to jump in if it turns, which it did. So that's your signal right there. You're short. If you miss that one, maybe you wait for this bar, but this is a trade you've got to jump in with a market order. There's, you don't pick a price and try to get lucky. You don't try to save yourself a tick. If you're trading a 10 lot, you put them all 10 on at once, you get in and you ride it. You get a stop between you and your entry, and that is it. That's all there is to it. Now, today was an interesting day for the opening 5. I'll come back to why in a minute, but I just want to show you a few other examples of that. This is the open 5A setup, and we will talk lots of examples of this. This one in the first hour high and low, and I didn't invent these, by the way. These are based on market profile theory, and let's talk a little bit about why this happens here. And you know what? To do that, let's grab another view. So that's that really fast kind of scalping, watching the ebb and flow way to check it out. And, if you go out to a 5-minute chart, you can see it a little more clinically. I love putting it that way because I coached two retired, they had just retired with a fortune from their medical practices, neurosurgeons they were. This was back right around the early 2000s. And that was, they used to love that. They always used to say, could you take, I call this zooming out, but they used to say, could we step back from the operating theater and, have some perspective? So can we be more clinical is what the doctors used to like to say to me. So this is the clinical view. And what they meant by that and what I mean by that is we're saying, okay, remember what I said about that on that seconds chart, that this was a really good level to think about short for a variety of reasons. It's also a ledge. If you know anything about market profiles or the volume profile, if not, you will learn it here. But for today's purposes, this is called a ledge simply because we have not been above it. It is also an edge, EDG, which is a form, a ledge is a form of an edge. How's that for confusing you with terminology? All right, let's just bring that, this thing back up again here. I'm using these for reference and pointing to things in the Slack deliberately. That way you guys can go back and look at them. And, oh yeah, that's what he said. Okay, so an edge is a type of setup. A ledge is just a form of edge, okay? Those aren't setups I'm gonna talk about a lot, but edges occur anywhere there's a volume profile as you leave it. So this was an edge here, but it's not a ledge. You know, to be a ledge, there has to be nothing on the other side of it, at least not recently. And so that's what we had up here. That's what I'm referring to. And so this is what it means when you should always look at your trade setup from the point of view of managing risk. Taking a short at this, what was the opening 5-minute high, which also turned out to be the first hour high, taking a short there only had the risk inherent of if it made a new high to there. That was the entire risk of the trade, because after that, the premise was no longer valid anymore. That's why this was such a good setup to get short here, or even better, to get short on that bounce when it kind of reconfirmed, and then write it down, and lo and behold, look where it turned. It turned at the end of the first hour, which is also called the initial balance if you're a market profile guy. It's also called the opening range. Those are all the same thing. The difference is initial balance usually refers to 2 30-minute periods. The opening range 60 is specific to 60 minutes, whereas the opening range 5 is specific to 5 minutes. So that's the terminology we use here. Opening range 60, opening range 5. You get it. Okay, so why is this way? Why does this happen? It's really important to understand that there's a really good reason why this happens. It's not by accident. It occurs every day on pretty much every instrument. And you know, here's another example, except it was the other direction. It was the low, the first hour. Here's the first 5-minute low and then the first hour low. And then it retested that first 5-minute high at the other end of it. Then did the same thing with the first hour high. It consolidated right to the tick on that price level, and then it offered a really nice long away from it, which again is very, very common behavior. We see this over and over again. So the moral of the story here, guys, is that these opening 5 and opening 60 price points, and it defines them. You just let it draw them. You know, the 5 is about momentum, and then after that, they're about, do they hold? They become what we call inflection points. An inflection point is simply a place where, as traders, we want to pay attention because price is likely to be disputed there. What do I mean by that? It's likely to be a place where people are going to disagree or argue, and by doing so, it could very easily reverse, or if it goes through it, it could go through it really hard. So that's what you're looking for. That's why it's an inflection point. And the initial balance, or the opening 60 minutes on literally any instrument every day, if you use New York's regular trading hours for that opening 60 minutes, not whatever the old instrument used. And that's true of gold, that's true of oil. I'm going to show you those in a second. This is a consistent, reliable setup to trade. It will literally happen every day. And across my instruments, I see it at least 8 or 10 times a day. So let's go shopping, okay? Well, obviously, you know, the NASDAQ and the ES, you know, they trade pretty similarly most days. Yeah, there's exceptions to that, earnings. But again, what would be the argument not to be short right there? Well, the reason that worked today was because all the people that got burned yesterday trying to short the open. And again, you can't just go by the technical behavior of prices. You have to look at the order flow underneath the covers. And we're going to get to that part in a minute. By that, I mean, you know, what was happening at that bar. And there's a variety of ways to do that. I like to watch it on the dome, but footprints are certainly useful. So here's an example of that. So here's our open right here, and you can just see this is only a 5-minute footprint, and you know, just each 5-minute interval, you know, sold down. They tried to kind of buy from older levels that there had been interest at. Sold through that one. You know, this just kept happening till we consolidated and we formed a bottom that was tradable. And lo and behold, again, I love using that with trading. Lo and behold, the low. See, there it is. I mean, that was the first hour-ish. You know, within a few ticks either direction. So that's the point. This is a repeatable pattern that if you just learn how it repeats and what its behavior is, you can make money with it every day. And you can pretty much do it in any instrument. Some instruments behave differently than others. The indexes, because they are derivatives of a couple of other things. In other words, you know, the futures are derivatives of the S&P 500, which is itself a derivative of the 500 S&P stocks. So because of that, there's some shenanigans, you know, that the market can do. You know, oil and gold tend to follow these as well, but they tend to get gamed more at these points. And, I'm not sure why that is, but one of the things I notice, for example, a first hour high on the indexes will often be to the tick, and in oil, it'll overshoot by 10 ticks, just so they could, wipe out some stops up there. And oil likes to trade like that. It's kind of the wild, wild west. But if you see it, it does respect the levels. It just kind of zips around them a little more aggressively, but they tend to, respect those inflection areas as ranges. And that's how I trade oil and gold. I don't look at those as hard and as fast as I do in indexes. I look at them more as, a suggestion and to see if they actually hold, because those are just more volatile instruments. And there's a couple of reasons about that. Oil actually represents, an oil contract represents a thing. It's only a derivative of a barrel of oil, but oil is an actual thing, and people need oil for airplanes and ships and whatnot, to make fuel and whatever else, heating oil. Whereas, you don't really need an ES for anything. So particularly in the overnights, traders can manipulate the derivative of the derivative thing. And so for that reason, the behavior is slightly different right at the inflection points. Like I said, these tend to be very tick oriented or very close to it. But beyond that, it's a very repeatable, profitable, gameable behavior. I'm going to give you some statistics for it in just a second. But I want to go back to the agenda and just make sure I'm being really clear, and then I'm going to pause for questions. So there's an open 5A, there's an open 5B, and then there's a first hour high and low. Let me just repeat specifically what all of those are whilst we look at a 5-minute chart. Okay, so this is a better example yesterday, so I'm going to use that. This was the opening 5 from here to here. So, if you were looking at this just in the first 5 minutes, it stayed between these two pink lines. That's what that means. And what you want to look for in that trade, and to answer your question, Anita, the second it shows itself, and it often does it on the first 2 or 3 5 or 10 second bars if you're looking at a chart. But on the dome, basically it just doesn't retrace at all. So if you look at, we're doing yesterday. So just for fun, let's go. Well, you know what? For this, I want to do a different example in a minute with yesterday. But let me answer your question because it's pertinent to right now. So let's look at it. So, and that's the problem with using minutes. So we'll start with minutes. And even if I was looking as fast as a 1-minute chart today, it's too slow. By the time this is one 1-minute candle here. So by the time a 1-minute chart reveals the trade to you, it's over, or it's well on its way anyway. So you can't use that. So, it's helpful for context, but you can't trade off charts, particularly that slow. And like 1 minute's really fast. No, it's not. Not in order flow, it's not. So let's look at that same thing, only let's look at it on, really fast, 15 seconds. Okay, that's fast. And maybe we'll even go faster than that. Okay, is an entry here logical? Yeah, there's a couple of them there, but just to exaggerate the point, let's get even closer. So let's look at 10 seconds. So this is the open 5A. The market opens, the bell rings, all the big traders that cannot trade overnight, either their fund doesn't allow them to, legally it's in their charter, or it's, they're just too big and they don't want to, they don't want to be the whole market, which they would be if they were trading overnight. So as soon as the opening bell happens, whatever their plans are for the day are revealed and they do them. So this is what happened. We opened, we popped up, and this had been a high, so that's one of the criteria we look for in the open 5A. You could have very, very easily just shorted that and, put a stop of a point or so away. But a better way to play that would have been like this. I'm just stretching this out a bit, wait for any attempt to buy this. And the second 10 seconds, a little spinner there as they tried to buy it, and then it just fell right through it. So that would have been a really good low risk entry there, because basically the top was in and your stop could have been very tight. What is it, 28.75, 29 half. So what, a 3-tick stop? And when did this turn? didn't turn until 17. Am I making my point? That's 12 handles, guys. You know, and you could have done it with a 3-tick stop. That's what good asymmetric risk reward looks like. So, you know, the perfect entry, you know, if you were computerized or if you were just on your game, would have been right there. And again, you know, don't take my word for it. That's my Furu voice. Let's go back and look at that, you know, on a footprint, because you can often see interesting information there as well. So let's see. I don't have the open marked right on here, and I don't have the first hour high and low. So okay, so let me put this on. It'll make it easier to see. Okay. So there it is again, right there, you know, like right 6:30ish, right? We opened, you know, and it sold off right away. And so here's what 6:45, and you know, that's where the turn happened. So it was really pretty clear, you know, even if you were just looking at a footprint like that, or you know, gosh, on a 1 minute, that probably was pretty obvious. But again, looking at a chart, you're kind of looking backwards. You're looking out the back window of your car. You're driving a Formula One race car. You're getting paid $200 million a year, like some of those guys do. And instead of looking ahead about how fast you can go through the course, you're looking out the window, wondering where everybody is behind you. And don't do that, okay? That's just not a good way to trade. The right way to trade is to learn to trust your skills and trade your own skill set. Don't trade everybody else. So look at that right there. I mean, that's 632 right there. We can see both a buy side and a sell side imbalance, and then it just fell right down through that. And that's a 1 minute. And then it took out every, you know, these blue lines are kind of imbalanced support levels. This is MZ pack, and it shows these. It just basically took everyone out on the way down. And these are the deltas, negative, negative, negative. I mean, again, you don't need to be a brain surgeon to be short. And at the same time, you don't, the setup was so clear and obvious where your stop was. So that's what I mean when I say it's asymmetric and there's no rules. It's discretionary, but you need to be patient and wait till it sets up for you. So, so that's a really good example of that. All right, let's put this back to here. And then I'm going to show a few other examples, and then I'm going to kind of, is there always a head fake? No, not necessarily. How is today different? Naresh, please type your question in more detail. If you're going to make a statement like that, today was different, please put it in the form of a question. This is like Jeopardy. So today I didn't see that. I saw XYZ instead. Do you think that was different? Yes or no? Can you explain why, please? That will make it much easier for me to answer your question. Okay, thank you. All right, so let me just put my charts back, and I'll show you some examples and some other instruments. And I'm monitoring the question flow here as we go. So how are we on time? About 10 more minutes. All right. I really want to get a little bit more into using this for retracements. I don't want to get hung up on the open 5A. So again, I'm going to cut you guys off that are just, you've seen the whole plan. Okay. So let's talk about the 5B and the first hour high and low. And then and those are much more weight oriented setups. And then I'll come back and take some more questions. Okay. So let's look at some examples of that. And again, always a real good place to find examples, because I will share them regularly, is in the Slack. And if you go to the first hour high and low, which is, this is setups, JM for me, Jeff Mam. So these are all mine. Lee's are LH. And then there's some experimental stuff down here. So if you go in this channel and, you know, just go to the top example. It's a really good one. I posted 3 different ways to look at it. And so let's just dive in. So this is kind of the minute by minute view. This is oil, and the 23rd, I guess. So you can see, you know, it came down to that first hour low, and it turned right to the tick, and you can see the delta turned as well. So we had the behavior we expect to see, not the crazy behavior that tells us the market is in discovery mode, but, you know, a positive delta leading to price going up, and then finding support at a high volume node, and then price going up some more, and then some shorts getting trapped, and price going up from the 5 low again. And now we're back up at the 5 high, or the 5 high and the first hour high. So that kind of completes the idea that we've solved the first hour range. So that's a very typical behavior. You'll see it over and over again, no matter what instrument you look at. And there's a real good reason it happens. The market opens, And the big traders, whether they're scalping or they're speculating or they're hedging or whatever they're doing, they're probably not doing it overnight. So when everyone comes in, we start to see kind of the collective consensus, what everybody's doing, and that results in price movement, or not, usually does. So when we get price movement, then you just want to see the right inflection points to take advantage of that. So let's go to the next one in this series, and that's this one. So this is what that looked like on a 30-second view. And again, you could see really clearly that it first hour high, it sold down, and every attempt to go up was lower volume and got sold harder. This is a Wyckoff wave volume pattern. I'm sure you've noticed I'm a Wyckoff guy too. That's a spring and up thrust. In this case, that was an up thrust, and that led to, this was also an up thrust, and that led to a sell-off. And you call it whatever you want. It's a really nice tradable pattern that occurs nearly every day. And then at the end of the first hour, all those guys were kind of done doing that. And then the bargain hunters kind of came in and started sweeping up the crumbs off the floor. So again, this becomes just like that. In CL or in the ES example I showed you a minute ago, it becomes a really asymmetric, low risk place to enter the trade. But our mentality is a little bit different here because we're getting a lot of information and we have had an hour to digest it. So at this point, what we're thinking is more wait mode, what I call wait mode. And the idea behind wait mode is maybe I'll nibble, when it does this, like test it a couple times, I'll buy one or two or three, whatever size account, maybe here I'll nibble again, or maybe I'll take a little bit off here. That's what I mean by a wait mode trade. I'm trying to build an intraday kind of scalping position. I treat every trade like it's a scalp, but when a trade starts proving me right like this, I tend to add to it. So that is why I refer to it this way, as a wait mode. And on those, I will often add to them as the trade builds out. And so you're seeing that here. And then again, if we go to the other view that we had, this was kind of a really large footprint view, only looking at imbalances. So here, what I was saying was, okay, I want to watch that turn, but it's been negative delta, sell side imbalances, negative delta, sell side. That's what going down looks like. You're either short or you're exiting your short, but you're certainly not long here unless you like to catch knives. Okay. But when it starts doing this is like, okay, hello, buyers are coming in and, let's see how aggressive they are. And so, this is kind of the floor forming, and then that's pretty aggressive. It's still not as aggressive as that, but, and then boom, it kind of aggressives away as it turns. So that's what that would look like. So that's kind of three different views of that event in oil on the, whatever day that was. Let's see, that was the 23rd. And there's a bunch of examples like this. It literally occurs every day. Here's a gold example, first hour low, 2-minute chart. Pick a time frame. The chart really doesn't matter, as long as you know where the low is. And again, gold sometimes shimmies right down there for a while. So, getting along there is not a high risk event. It's a low risk event, and you can add to the trade as it starts to work. But the beauty of this, the reason it works, is because so many trend traders are going to get caught on the wrong side. All the guys that were following this trend down and looked at this previous low and thought, okay, great, breakdown. Those guys got sucked in, and then they just got raped on the other direction. That's what happens, and that's why order flow is so critical. You have to be inside of these bars and see what's actually happening. And that's where the footprints are so valuable, because you can look at a turn, like here's one right here in oil, and you can say, okay, sell side imbalances, those sellers got caught, and so it pushed down pretty aggressively off of what was almost 52, which is kind of what it's been doing, and nice little 30 tick move down. So this pattern's everywhere, and it's not like I want to sell you a magic indicator to trade it. You just got to learn to look for it, slap some stuff on whatever chart works for you, or the dome. Anytime there's an inflection point, it will appear on the dome just by definition, because it's where you're going to see a bunch of volume. And so if I look at that top, here it is on the dome in the ES, and let's just look at all the indexes near the top there. And it's pretty obvious what was going on. Boy, the NASDAQ was obviously, it strings out much more, but you kind of get the idea. There was a little bit of volume up there, but everybody sold down from there. And the one we were looking at to trade was this one. And so, getting from that area down to where we are now was really a no-brainer. Remember, we were just looking at that right here. Now we're in the middle of that range. And, here's another Docism, another Jeff. Stay out of the middle. This is the middle. There's no edge here. Everybody pretty much agrees on the price. So, that's why I call it the rookie roast. And that's why I say, this is a good time to go get coffee. Okay, now we're running right up on an hour, and I'll keep going. But for right now, I want to pause and take questions. At this point, it should be clear what we're talking about, with this concept of playbook and looping around, doing research to find setups, testing the setups with real trades, determining when they work, when they don't work, filtering them. We talked about that last week. We'll talk more about that in coming sessions. And here's two really good examples of how you can do that in any instrument, just by watching the opening 5 minutes and then by watching the opening hour. And that's really the net of this. Obviously, getting it right and executing it well is about that loop, which is important. It really is. But this is something else I started to point out at the beginning, and I'm going to stick this up here. This is also up in the Slack, and this is kind of a way to stay on track. I made this for the workshop people, and a couple of them use it. It'll kind of walk you through this the right way instead of backwards, which is looking at a chart for a setup. Understand what the market's doing, and then look for your setups and look for good entries of the setups that you're already aware of. So anyway, that's up in the Slack as well. All right, so let's pause there for a second and let's go back to here and let's see what questions we have. All right, let me look back from the questions. Let's see, half a century. Yeah, the jigsaw meters. Okay, I'm not going to go into it in a lot of detail today, but I use the meters in Jigsaw for a couple of different things, and I've speeded them up since the workshop people saw them last. I'm now running, I think, 15 seconds and 90 seconds. Let me double check that. And there's a good reason for that. I don't want to go into it now because it's totally different than what we're doing. Yeah, it's 15 and 90 now, all trades. What they do, just for those of you new and never seen Jigsaw before, is basically they sum up the period. So this is all of the trades over the last 15 seconds, all of the trades over the last 90 seconds for each instrument. So they're just giving me an idea of kind of a time-based footprint. In case I turn my attention away for a second, I could look back over here in oil and say, okay, the last minute and a half, it has a buy side bid, but the last 15 seconds, it's on the sell side. That's all. That's how I use them. Okay, let's see, other questions. Let's see, where do I jump on the open? So Anita, I hope you understood that about the open 5. All I can tell you beyond that is it takes practice and just seeing more and more examples of it. It is a momentum trade, so you have to be reasonably quick. You have to learn to either take it or not. There's no scaling into it. There's no, thinking about it. You cannot hesitate because it usually unfolds very quickly. I mean, we're looking at 5 and 10 second bars. So you might have 5 seconds, 10 seconds to make a good decision. You don't have much more than that. And if you make a bad decision or two in a row, just walk away from it. There's days, even me, I just get on the wrong side of it. The next thing I know, I'm upside down by $1,000. And it's like, okay, just don't do that. I've just taught myself not to do that. And, even I still do it now and then. I still get caught doing that. The group saw me make that mistake during the workshop once, and I lost about $3,000, I think. And then I just turned around and scalped the rest of the day and made it back. And, I haven't done that since. I think that was in October, November. So, that's what I mean about using your process to improve yourself. You've really got to stay focused on that loop. This is about building processes and making those things work for you. And it's not about finding magic indicators because there's no such thing. It's about this. It really is. And, you're going to hear this over and over again here. But the only thing that matters is building something like this for yourself and then following it. And when I say that, if I break my process, I penalize myself. I go back to this and I say, okay, how can I make this better so that I don't make that mistake again next time? And that's how this got where it is. I mean, there's literally hundreds of thousands of real trades behind this. And again, the guys in the workshop saw some of the spreadsheets and the C# and C++ and the Visual Basic and all the ways I've tested this with code and recording live trades over the last, literally over the last 40 years, but these particular setups over about the last 20. So anyway, all right. So is there always a head fake? Not always. Here again, Anita, the way to understand this, and this is true for all of you, is not to think that, oh God, Jeff's a furu and I've got to memorize what Jeff says. You know, I'd love to try to sell you the $10,000 software that does that, but here's the reality. The reality is I'm teaching you a concept that's just market behavior. This is how markets that are traded by real professional traders, like futures markets that don't have market makers in them, you know, literally, you know, I'm buying from the guy who's selling to me, and yeah, there are people that make markets, but they're still, you know, zero-sum game. In the stock markets, there are actual market makers. Futures do not have them. So it's a very much, you know, who's on the other side of my trade? That's what I want to know. That's what I'm thinking about constantly. So the open is just, here we've been, you know, meandering along at night and, you know, just literally just pick an instrument, pick a day, let's go get gold. So I'm going to go get gold and we're just going to drag gold over here. And so here's 1 minute in gold. Let's take it out to, I don't know, 8 minutes. So we can see a couple of days. Let's see, I only got 3 days there. I don't want to go get more data because that makes Ninja slow. But this is enough examples. You can really see right there. I mean, again, it showed its hand really fast. Just go with those. That's the open 5A. And then the open 5B and the first hour high and low is, okay, are those going to hold? And if they do, particularly if they were significant a day or two earlier, then let's go with those until the consolidation starts and we start doing this stuff. And then, you know, get out of the market, you're done. And it literally does that almost every day, one way or the other. I mean, you know, with very, very few exceptions. So I hope that answered that question. I'm trying to answer, you know, I'm not trying to be vague, but some of this, you know, there is an art to this, and you can ask the guys in the workshop to get good at that. It's just practice. You just do it over and over, you know, and scalping is a really good way to learn how to do it. You know, do 1-tick scalps and, you know, do a couple of hundred of them a day. You'll learn this really fast, you know, and then you can trade at whatever interval you're comfortable with. Okay, let me look at some more questions. Okay, so Naresh, you are clarifying. So you meant market dive and on open. Okay, I noticed you were watching things like gaps and things like that. And again, the problem with that kind of thinking is that you had a preconceived notion that, you know, it's a gap, first of all. Well, yeah, it is a gap, but what's important isn't that it's a gap, it's that what's going on in the gap. And so I have gaps. I have them on my old trading platform, which is Thinkorswim, which is here. And, you know, there's no chart that can show the energy fast enough was my point. My point was, if you're watching it on the dome, you'll just feel the energy as it's happening. So every day is the same. There's always that opening 5A energy. So I with all due respect, disagree with you. Every single day, this trade presents itself. Some days there's ace kings and some days there's a pair of jacks, but this trade sets up every single day just by virtue of the fact that regular trading is opening. And if for no other reason but that. Now, when it gets past the opening 5, a lot of times it's confusing and the opening 5 is all over the map. And that's the kind of day where I'll say, okay, let's see, how does my process handle that? Well, my process says, if I'm not sure, or if it's consolidating, I sit on my hand, and or if there's gaps, I go for weight setups and I look for the first hour high and low, more importantly than I look for the open 5. So that's exactly what this box means. And as you listen to me more and more, you're going to find that every one of these boxes has a very significant method to the madness. And that's those two right there. That's the answer to your question. It occurs every day, but you need to read it right. So I hope that makes some sense. Okay, the open 5A is purely the momentum, and the open 5B is like a first hour high and low trade. It's off of inflection points. That's the difference, Anita. And, this is the first time you're hearing this. So of course it's not going to make sense. There's a lot of people that think you should just be able to buy a class and trade that thing the next day. And again, I point to my neurosurgeons thinking, well, we're neurosurgeons. How hard could trading be? Okay, $1.7 million each later of their own money. It's really hard. It's a lot harder than medical school was, because it's not about memorizing. It's about learning to govern your human instincts when you're at inflection points. I know Lee has a trade that involves the word puke, a setup. And a lot of traders like puke setups, because that's when everybody's going one way and they're all puking out of your trades. You want to be the guy on the other side, because that's the inflection point. So again, that's how it works. That's real trading. Okay, let's see. I hope I'm not mispronouncing your name. Orestas? Orestas? Is that? Spell it for me phonetically, please, as I butcher it. Okay, when you're scalping open 5A, do I have strict targets? No. Oh, thank you for asking that. And you were the one that asked me about rules. It is completely discretionary. I have nothing but a catastrophic stop, and sometimes I'll take a tick off. Sometimes I'll let the trade run all morning if we go into an opening drive setup. So great question. You'll have to see more examples over time to get how I make those decisions. But again, I'm really good and consistent at it, not because I'm a genius, but because I just apply the same process to how I do it. The same thing, I look for the same thing over and over again. But that's a little beyond the scope of this session. Scalping is a learned skill, I will say that. So once and I will do live sessions, I'll scalp right in front of you. Once you see more of that, you'll understand what it is you need to practice so that you can do it if you want to try to learn to be a good scalper. But it is definitely a learned skill, much more than anything else in trading. Okay. Yes. Okay. The open 5, Anita, is nothing more than the opening 5 range. And the 5A is the beginning of it. And the 5B is kind of retests of either end of it. Because we're looking at the range as being significant, because it's like the starting gate at a horse race. It's like they're off, and the bell rings and everybody comes running out. And because of that, it kind of sets the tone. But it's not always right. If we're going to have a trend day, the open 5, let's show you guys that. Okay, hang on. I want to show you what it looks like when we have a trend day, because it's really obvious in the world of open 5s when we have a trend day. Let me see if I can find one here. Oh, this chart's too slow, so it's not going to work. Hang on. I got to go get more data, which I don't do during the day because I like to keep my setup really lean and mean. So just give me a half a second here, guys. Let's see if we can get one on here. But I do want to show that because that's a really good one. When the open 5 just rock and rolls one way or the other, that's almost always a clue that we're going to have a trend day. So, okay, here's a couple of really good examples. How about this day right here, January 31st. Okay, whoops, sorry. My mouse is sticking. All right, here we go. So here's one right here. So here was the opening 5 high at 32.80, the opening 5 low at 68.75. I mean, and you could just tell by that energy that if we took this price out, which was also the high of the range the previous day, that it was just going to go down hard, and sure enough, it did. So it's often a clue you're going to get a trend day, but not always. So that was a really good question. Journalytics rocks. I love it. I'll be doing them further detail on that, Kavika, but not in this session. Right now, if I have been doing any trades, it would be putting the notifications up in there. It's not, but I really like Journalytics. And I'm just now getting it down to the point where it works the way I want it to. So, all right, let me read some more questions. It can be pretty hard when the market starts making rotations. I don't know what it is, and if you're a good scalper, it's not hard. You're in and you profit, or if you're in and you're wrong, you get out of the way. You take a 2-tick loss. It's not hard because you don't sit in a trade and think about it. If you're ever doing a trade waiting for the trade to work, there's something wrong with the trade. That is a very hard and fast rule of mine. Good trades work right away. And that's another, I have kind of 3 rules that, if you want rules, I'll give you rules. So here they are. Rule number 1, Always take profits. So here, I'm going to type these so you can kind of follow along, and play at home. So one, and I have arthritis, so my typing can be hard, particularly when I'm looking at all these screens. Always take profits. Okay, that's number one. Number two, good trades tend to work right away. It's just the way it is. If you're sitting in a trade waiting for it to work, or you have to add to it to make it work, hello, the market's telling you you were either early or it's a crappy trade. So don't do that. Number three, okay, do not lose money. It's that simple. If you follow those rules, you'll be fine. I mean, that's the rules that I trade by. There's three kinds of trades I will allow myself to do. Small winners, and I do a lot of those. I'll make, $20 a trade. It's like picking up $20 bills, $50 bills. That's scalping. With more size, you make more money, take a little more risk. If the conditions support that, you can make $1,000 an hour scalping 2 and 3 lots. Then there's other times when the conditions say, no, slow it down. Wait for the first hour. So then you gotta treat it that way. So you kind of got to go with the ebb and flow in that sense, Anita. But the mistake many people make, and again, I'm saying this from the point of view of trying to make you a better trader. Even your questions, I can tell, you've been hearing other, Furu-like approaches, that there's, some indicator, MACD, or, take your pick, whatever, RSI, or that there's some way you can set up rules that will make it so you don't do that and that you're on the right side. And that's nonsense. That depends on time frames and the market condition. There's literally thousands of variables, and MIT mathematicians, working for Goldman Sachs's algo fund, have trouble getting that right. So Jeff and Anita certainly aren't going to get that right. So don't think we can. We're not that smart. You got to learn to go with what's happening immediately, and that you have to develop a set of tools to help you make that decision. And that's what we're doing here. And I hope that makes sense. And that's what the setups are about. There are ways that just over and over again keep happening. And, so we learn to use filters for them. And that's what these things over here are. There are open 5 Bs and first hour high and lows that are better than others because of gaps, because of the internals in the market, because of volatility, what's going on with the correlation with the other indexes. Is it a choppy day? Not. Those are all the things you've got to look at to make the decision as to whether you've got a high quality setup or not. That's that, is it ace king or is it a pair of jacks? And, even something as simple as internals. Here's the internals. Right now, they're about as neutral as they get. Well, no, advanced decline's a little bit positive, but not overwhelmingly so. So, you could say that that's kind of like, yeah, meh. That kind of goes with the price action we're seeing. The internals, you could describe them as sideways too. Nobody is making a big commitment right now. So why sit here and try to trade this? You don't have an edge. Go home. But at the open, look at these really cool, very clear, definable edges we have. Let's trade those. I mean, that's really what it's all about. That's what TRG is all about. That's what Jeff and Lee are all about. It really is that simple. I'm not meaning to imply that it's easy. The hardest part of it is doing it as a human being and managing your own discipline. And that's why we formed this group, so all of us could manage each other and keep our act together collectively. And, and I'm kidding, but I'm really not. That's what we are about. Okay, but the number one thing I can tell you is that any 2 lines or any 5 lines or any lines crossing on a chart is meaningless. And you can't use that as a way to decide if something's good or bad in terms of opportunity. You have to dig down and look at what are people thinking. Here's another one I was showing David a couple of days ago, and the chat is posted somewhere, or it will be. It's just a one-on-one he and I did. And I was just saying, one thing that you see a lot, particularly overnight, but during the day as well, you'll see the NASDAQ and sometimes the RTY lead down. And when you see that, you can just throw on a 1-lot scalp, and it's really not those conditions now, but just if it were, I could just do that. And so I'm short, and I'm literally I'm already in there looking for a tick. And, like I said, this isn't a particularly good example of that. It's actually going the other way. But he watched me do that, and we made a tick right away. And you know what? This one actually I think is going to work now that I said that. And there you go. So I just made $12. That could have been a 10 lot and $100. And, you were asking me about journalytics, you'll see a notification pop up here in just a second that'll give me a chance to journal that. Oh, you know what? I have journalytics closed because I didn't want it to bother us. If I had it open, it would do that, and that's really cool because you can either journal it or not, and it tracks the trade for you. So that, to answer that previous question, I love it, but you do have to learn to get it working your own way. And Kawika, we could definitely do a one-on-one, and you and I could play with that a little bit. Been meaning to do one with you anyway at some point. Okay, let's see. Okay, just for an example, at the first hour high and low, there were a lot of rotations. Exactly. Yes, Anita, that is exactly the point. There was a lot of rotations. So who won? I mean, did the longs or did the shorts? The shorts won. So there's the answer to your question. It's literally that simple. Hang on one second. He had told me he was going to be quiet and on the sidelines because he didn't want to talk, but no, it's not contra trend. It can be whatever it is. It might consolidate down there and then continue to go lower. So no, it's not contra trend. It's trend. It's whatever the order flow tells you it is. Yes, it's vague because it's discretionary. That's the whole point. Let me see. Yeah, Lee, go ahead. Here, if you want to do that. Lee's going to show an example on a Sierra chart footprint. Maybe that'll be helpful for you. Imbalances is one of the things I'm looking for. I'm looking at the trading. What's going on? Who's winning, buyers or sellers? It's not something you're going to learn in one meeting, Anita. You have to just say, okay, that's what it means. And then you have to look at 200 examples. And then after that, 200 more. And then you'll just see it. You'll say, oh, there's one right there. That's how it works. It's practice. It's like martial arts. You know, Bruce Lee once said, I'm not afraid of a guy that knows 10,000 kicks. I'm afraid of a guy that has practiced one kick 10,000 times. That's what it's about. So are you going to jump in here, Lee? I will unshare and let you do that. Nope. Yes. Okay.
Sorry, Jeff, I double muted myself.
There you are. Okay.
Cool. Right, you can see my screen, I think. Yeah.
Yeah, we can.
So what I've got here, and I know Anita from previous conversations with her may relate to this better, but just to stress the point. Open 5A is all about momentum. We are scalping the open. We're just going with energy, and whether we read that energy through, okay, simple 5-minute footprint here. Are we reading the energy through imbalances? Well, there weren't many. As the candle forms, are we reading it through, oh, look, it keeps going, it keeps going, it keeps going. Price action. Are we reading it through, it hasn't exhausted, it's unfinished business, whatever. We're just using our experience of why this thing keeps going. And it's about trade management, I'd contend, Jeff, wouldn't you? It's like, get in well on a pullback, however you gauge that pullback, get your stop in between your entry and where you are, and let it keep going.
Yeah, it's that goes to the question of whether it's only counter trend or not, and the answer to both questions, but specifically, Anita, this is a really relevant answer, and please take this the way I'm saying it. But you would like me to show what I need to be looking for, okay? What I would really like you to do is to assume you know nothing and then go back and watch this video over 3 or 4 times. And then for the next week, just watch first hour high and lows, and not so much the price point, but watch the behavior of the trading at that area.
And then to not open 5B, sorry, first hour high low, but it's the same principle as open 5B. It's here is a level which we know from lots of trading over time is going to be a significant level, whether it's for open 5B, first 5-minute high or low, first hour high low. Well, it's the
a previous day's low, a previous day's high. Yeah. Take your pick. It could be a fib, it could be a pivot. That's the point, Anita, is that it will present itself. And all of you guys, I'm not just saying this to you. These things will show themselves to you, but you have to step back from your kind of rigid, and I was the same way. So I'm not attacking, I'm saying step back from this idea that there'll be a clear, okay, step 1 is this happens, then step 2 is this happens.
And
Then step 3. Okay, go ahead.
and yeah, these levels could be anything. You know, they could be technical levels, they could be arbitrary lines, but first hour has got enough consistency and repeatability that it's worth paying attention to it. So today, you know, I was short today. What made me get interested in being short? Well, I treated the first hour low slightly differently from how Jeff does it, because we had unfinished business at the first hour.
Whoops.
Trade towards it. Yeah. And as I look inside the 5-minute chart, well, we had aggression on the way down. There's a zero print. Fine, we'll talk about those another point in time. We had a very nice pattern at the top of the next 5-minute candle. I was very happy to get short somewhere around here to trade down to here on the premise that this is going to break. I don't care how it's going to break. I'm not interested beyond here, but I knew that as a level that lots of people look at, we were probably going to revisit it. And that was the premise for me. Now, to Anita's point, there was a lot of action around it. Well, yeah, you know, lots of people care about it. And this, in the 5 minutes or 2 5-minute periods subsequent, when we broke it, we broke the initial balance low, C period goes lower. The fact we have these peak deltas here in each candle, this tells us that it was a level of interest, an inflection point, somewhere there was where people were, you know, fighting around it. So on a super quick chart, you know, 30 seconds, however many ticks you want, of course it would have bounced backwards and forwards, but depending upon your approach, depending upon your comfort factor, you might have been scalping it just based upon the energy. You might have been trading towards it. You might have been thinking, well, actually, we've broken it, and looking at the bottom of it, you know what, we've gone far enough. You could have waited for the break to come back up, looked for a pullback. But there are 2 or 3 stories around this level, even just looking on a 5-minute chart, that create lots of tradable opportunities. Over to you, Jeff.
Oh, okay, cool. All right, Roger Wilco. All right, so that was a great explanation, and thank you. And you know, I keep coming back to this, but more will be revealed. I mean, not that we're keeping secrets. It's just this stuff takes time to learn, and I really encourage you to just kind of learn the feel of it and a couple of perspectives on that. You know, a footprint is really helpful, as we've seen a few examples. To see ebb and flow, but just as useful as that, and I do look at imbalances, and I do, since Lee's session on last Saturday, I started looking at unfinished business as a way of filtering it as well, and it's helpful. But you can also look at it if you just kind of look at the ebb and flow on really fast charts. You know, go to a 10-second or a 30-second, and you know, you'll get the kind of the idea. And so when you get to an inflection point, you know, it'll come down hard, aggression, you'll see that. And then you'll see, you know, this is what negotiation looks like. This is what consolidation looks like. If that just happens to be an opening range price point, well, it's basically telling you, hey, guess what? This is an inflection point. And it's not like you can say, oh, enter here with a 3-tick stop with your target here. That's not the right approach to take. The right approach to say, okay, this level is probably getting bought. You know, these heavy sellers couldn't push it down anymore. So maybe I start nibbling into this as it leaves this area, and, you know, maybe buy a pullback to add to it, you know, and you can use this behavior. You know, maybe here you take some off. Maybe you take full profits, then you see the trade creating itself again, or you say, you know what, that moves over. So there's a lot of ways to look at the price action. What you want to learn is what the price action is that you're looking for, and not so much get married to any one type of tool, a footprint or the dome or anything else. And then you'll be able to see it anywhere. You know, you'll just walk up to a ticker tape like they had in 1920, and you'll say, oh, it's like Wyckoff did. You'll say, oh, that's a spring. You know, I'm going to short that. So. All right, there were a couple other good questions that came up. Let me go back to them. Jack, I believe, asked me if I could do this live. And yeah, I do. I actually do it all the time. I did it for the workshop. I will do it for you guys in both ways. For the TRG group, I'm going to do it both recorded and a lot of times around news or whatever, like maybe this Friday. Sometimes I'll just put on trades either in sim or with real live money, with my own money. A lot of times I'll just demonstrate a concept by, like I just did a minute ago, doing that that one tick drill. So here, let me get journal. Well, no, that'll take too much time. I was gonna say, I'll show you one right now. See, that's my natural nature. I'm like, oh, let's stay here all day and play. So yes, I will do that. And when you see the recordings from some of the previous sessions that we did in the workshop, a bunch of times I did that where, I'll just say, okay, I'm gonna open up the live room and I'm just gonna tell you what I'm thinking for a half an hour. So we will do that, Jack. Yes. Okay, first hour. Yeah, David's giving you really good advice. And he's only 20 years old and just naturally impatient. So first hour, let's see, first hour load just happened on NQ. Well, let's see, Bar. Let's roll over there and have a look. So here is, okay, it is testing it right now. So yes, so on a 5-minute chart, I can't learn anything other than it's doing that, which is why, I really only use those for context. I really want to see either on a footprint what's going on or on my fast wave chart. So let's look on a footprint. And so, yeah, it just did it again, right there. And I could go down a lot faster on the footprint and see it better. I could also zoom out and see it on 30 minutes and see the same thing. So, the issue is really more about, there it is there too. It's really more about learning to see it on a place you can trade it, which is the domes, and using the charts just for context. And you'll get really good at it. Here's what it looked like on the 30-second. So yeah, it's testing it right now. And here's a bit of experience. When it does that at this time of day, there's a pretty good chance that we're going to retest the lows going into the close, meaning that low, and that low. And I don't know if we have unfinished business down there or not. I'm going to guess we do, but I don't know. Let's go look on a 30-minute. At least the way I have unfinished business organized based on what I learned Saturday. So that's unfinished business there. We took that one out. So right now, not really, but that's certainly an interesting low to watch. And every time frame tells a different story, which is why charts are always wrong. All charts are always wrong. Okay. We don't on ES at the low. Okay, yeah. Thank you. So we just looked and I didn't see it either. So guess what? Lee, our charts agree. NinjaTrader and Sierra actually agree on unfinished business. It must be because it's based on market data and it's not an indicator, right? Okay, I'm just picking with the rest of you guys. All right, what other questions do we have? Let's see. I'm looking at, David asked me, if you were to get better at reading a footprint, could you see the reversal? Well, of course, the better you get at reading the market anyway, the footprints, the fast charts, basically all tools are good for different things. And, the beauty of the jigsaw dome, David, is that there's a footprint on it. It's right here. And I can reset that footprint anytime I want. And I can also reset that, kind of the momentum on either side of it. That's what these two columns are. So I can build my own footprint right on this current inflection point. And we can kind of watch it trade and see what happens. And right now, the delta is negative on it. You can see there's a slightly heavier sell side than buy side bias, but not by much. The NASDAQ is trying to lead down, but it's not getting anywhere yet. So this is a really good scenario to just watch the domes and just forget about the charts. And you don't really need to watch oil and gold when you're doing this, but sometimes if gold's going the other way, that is a good filter as well, because it's just rotation. Gold's going up and the indexes are going down, that's capital moving. And this time of day I don't pay much attention to oil, which is what this is. So anyway, so you can kind of see that this attempt to sell off isn't getting anywhere. And if I again just reset the outsides and watch the NASDAQ keeps trying to push down. We could stick this here and watch it there too. We could even pop in and look at it like I like to, what's that look like for 10 seconds? And then we can get an idea, if there's a pattern in the pushes. That's what Wyckoff wave volume is all about. Is there, do the pushes follow any kind of wave structure? And so right now, these are the deltas down here, and these are the ups and these are the downs. And, this is pretty much what consolidation looks like. So no, and we're seeing that on the dome too. So literally, I just read to you how you would read a first hour low. And if you were reading that right now, it tells you have no edge whatsoever. It's not going down. It's not going up. Nobody has conviction, which is reasonably consistent with this time of the day. So Anita, that was a perfect example of how you do this. except when it's doing it, one of the more aggressive moves, like we saw here, you're going to see much more telling behavior. It's going to look like that, not like this. So again, I promise you, if you just sit down and try it and give it time and just watch it, you'll find that it tends to look the same every time, and you get just and that's what we call flow. You get, or we also call it a blink, based on those two books that are in the bookshelf. I'm referring to these two books. So the bookshelf is here, the book list, and this book, Blink, which is about making decisions without thinking about the steps in them, and this book about flow. Anita, you would find both of those, I think, really valuable in understanding how this process works once you actually are doing it real time. It almost is automatic, and a couple of the workshop people have shared that. I know Darren has, and Amy has recently, and Alessandro has, and Felipe has, and Maria has. Even if they're sharing about, hey, 2 trades made $50 today in 10 minutes. That's what they're saying. They're saying I had flow and I just did it and I didn't really think about it. So that might be a good place to need also. Look at them, talk to them, ask them these same questions. How did they learn? I have some other ways of teaching this that I can show you down the road, but this is a good way to start. Okay. Any other questions? We've gone almost an hour and a half now, which is, I don't like to go any longer than that because it's just too long. So anybody else have a burning question? Otherwise, I'm going to go back to my agenda and just make sure we did what we were supposed to do. So did we talk about that loop of finding setups and researching them? Yes. Did we look at the playbook and a couple of the more popular setups? Yep. Open 5A, first hour high and low. How to trade them? There aren't rules, but there are certainly order flow guidelines that will give you the tools you need to get on the right side of that trade or not, or to sit out if it's just not a good setup. So, and I think it's really important to do this. You've all been kind of dialed in for the last 2 hours on this kind of 2-minute stuff. Take a step back and try to put this into the context of your overall trading business and how it might be useful. Absolutely. What Amy's saying here is seed time cannot be taught. You have to take 1,000 trades. There's nothing more true than that. Yeah, there's lots of videos, Anita, but again, I'm going to suggest very strongly, this isn't about watching videos of the past. All you're going to see is me repeat what I just told you today 8 more times. Get out there and watch the trade unfold real time. Watch it tomorrow. Watch it Friday. Watch it Monday. Watch it, just every day. Pick an instrument, pick all instruments. That's how you learn to do this. Yeah, Amy's giving you really good advice here. She's been a really good student and has been really successful with it. Take notes, journal your trades. That's what this is about here in what I call the flow. Just use this flow. This is how you do it. If you follow these steps, you'll be consistent and you'll be profitable. Spend 5 minutes looking at the context of each instrument based on the time of day. Step 1. Step 2, the ideal feeling, the ideal flow is to have a blend of scalping based on what's going on in the overall context, like the first hour. So that's kind of what I'm looking for. If you're seeing behavior in the market that lends you to believe there's a setup there, based on that context, then look for the better ones of those. If it's there, go for it. The first thing you should decide is, where's your stop? Where is that setup no longer true? If you've made the same mistake, ask yourself if you're doing something over you've done before. If not, go for it. Either take a winner or take a small loss, journal what you learned, start your brain over and do it again, and do this 1,000 times, literally. Amy's has shared her journal sheet. It's a really nice layout, and she shared it in the Slack as an Excel worksheet. I believe it is in Process Shares or Anything Goes. It might be in Anything Goes. It was just this morning. There it is right there. So that's a really good format. You can see how Amy's been doing it and what strategy and whatnot. And she has some other ones with more notes, like this one here is kind of what it looks like when it's complete. So let's see, why am I not able to zoom in on that? I should be able to. But anyway, this is all there for you guys to check out. But there's a really important message here for all of you, and I'm not just picking on you, Anita. I'm just trying to make a point here. It's about just burning process into your brain. Forget setups for now. There are thousands of good setups. We will teach you 24 of them. If you can get yourself in a really structured process for trading that doesn't have distractions, that has ways of keeping you focused, then sit down with one of the setups and just practice it over and over again. And it took some of the Motley's months to put this together. They're sharing that with you real time in the chat. So it really does. And that's why the doctors lost $1.7 million, Anita. They had the same approach. They were like, well, but you're not telling us how you do it. And I said, yeah, I'm telling you exactly how you do it. And then I finally went back to them one day and I said, okay, all right, let's do this the other way around. Okay. Tell me how you remove a brain tumor. Step 1, you cut the brain open. Step 2, you get to the tumor. Step 3, you remove it, right? That's all there is to it. And they laughed. Yeah, like for sure, that's all there is to it. Literally, Anita, that's what you're trying to get me to give you when yeah, it's that simple. But if you just get in and do it, just practice, it will become like brain surgery. You'll be able to do it, and people will watch you like they watch me, and they'll say, okay, how do you have a 90% win rate, over 20 years? How do you do that, And the answer is practice, process, practice, process, practice, process. Okay, and I'm not going to belabor that point anymore, and I also don't want to go too much longer, so I'm going to, does anyone have a burning desire? I've heard that at support group meetings of all different kinds. In other words, does anyone have a question they just have to have me answer before we wrap up? I will look, and if not, no, Anita, don't apologize at all. I want the questions, but in your questions, this is the point I'm making. In the thread, in the spirit of your questions, I see you stuck on wanting steps and wanting 1, 2, 3, and that's not how a successful trader thinks. They think, okay, where is my advantage presenting itself? And is that what I'm seeing? I need to build a model that allows me to do that. And I need to assemble tools, whether it's footprints or first hour high and low markers that do that. You don't want to rely on any indicator because invariably it's wrong. It's just another tool. That's all. And you'll get to the point where, the group has seen me do this and Darren commented on it. I'll take a trade and then I'll go to journal it. I honestly don't know what setup it was. I blinked. I just took it based on 47 years of experience. It just happened. It's like driving or flying an airplane. I do that too. I don't know if you're a pilot, anybody's a pilot, but you can't explain to someone how to fly an airplane. No, you can, but that's called ground school. When you're in the airplane, you got to just do it. So, Nike stole that, but they're right. Okay, good. These are all great comments you're hearing from people. Okay, again, then Anita, this may not be for you. I am a very matter-of-fact kind of guy, and my approach is always going to be, look, here it is. And if that offends people, there's plenty of places out there to spend your money. What I'm teaching works, and the people here are a testament to that. But I'm trying to give you experience from having coached 2,000 or 3,000 traders. And if you want to argue with me about my coaching methods, then this is not for you. Honestly. Okay, with that, any other questions? And by the way, no hard feelings. I won't say Anita's a bad person if you choose to go elsewhere. I'm just telling you that this method works and it might offend you. And if it does, sorry. My job is not to be your friend. My job is to make you better. And if that's too hard, that's what we're about. And bless you. I love you. I welcome you to our group, and I really hope you do stick around. But anything, if any of you are sitting in the audience saying, "Oh yeah, that's personal," then then you're just so you're misleading yourself. It's never personal. It's ruthlessly critical about yourself and anyone else that will do you the honor of being ruthlessly critical to your face. That's what I look for in trading partners. I want someone to say, Jeff, you're being an absolute idiot buying that, and here's why. Bring it, change my mind. That's why we're all here. There's 47 people here, and the idea is, to get a nice, the 27 of them are Motleys from the workshop, and we're all doing that with each other. That's why you see us constantly posting our results, whether it's $50 or 5,000 for the morning. It's so the other people can be motivated, and so that the people that aren't doing well can say, all right, tomorrow I'll do that. And for the people that think there's some magic indicator and that if Jeff would just stop beating me up and give me the step 1, step 2, step 3 that I really need, I'd be profitable. You know, those people, it may not be a fit. But, you know, it works better when you're in a group that is not afraid to offend you. So with all due respect to all of you and me too, you know, I insist that everybody get in my face when I do something that's wrong or against my principles. That's why they're here. I love it, Jack. Exactly. If you guys don't know American humor or old Saturday Night Live skits, but Jack just posted, Jeff, you ignorant slut, as in Jane, you ignorant slut. That is so true. All right, with all that, I am going to give it a couple more seconds. I'm going to wrap it up. I'm going to go back to the agenda and just say, I think I accomplished all this. I hope so. And I'm going to put the disclaimer back up one more time. Make your own decisions. We don't tell you what to do. We just give you some tools and some ideas about how you might do it. And then, of course, do this exercise. I promise you, if you go out and you look, okay, 2 decades from now, where do I want to be? I did this with David. I said, you know, God, in 10 years, David, in 1 decade, you could be trading $1 billion hedge fund because you're 20 and you're just starting. Forget college, man. Get out there and do 50 or 60 or 100,000 trades in the next 10 years. And then go get a bunch of other people's money. So that's what that means. And then, you know, when you're learning this stuff, you really got to zoom in and focus for 2 minutes to 2 hours. And then, you know, how can you capitalize on this tomorrow? Anita, I know the answer. Practice. Go watch this stuff. That applies to all of you, not just Anita. Me too, by the way. And then, you know, you don't need 2 months. Come back in 2 weeks. I promise you, you'll be saying, God, that first hour high and low. I mean, just look at Jiri posting in that thread, or look at, you know, there's a half a dozen people. Felipe is doing it. Darren, they're saying, God, I took that trade today again. I took again. It's just there over and over and over again. So we're not saying, yeah, no, don't misunderstand. We're not saying that you're an ignorant slut. That's from Saturday Night Live, just for the record. It's Jane Curtin, and it was a very funny bit. For those of you that are old farts, like apparently Jack and I. Okay, with that, I'm going to let you guys go. Have a great day trading, good week. Next sessions, there may be a live session on Friday around the employment report. I say I'm going to do those if I think I can, but for sometimes I can't, so won't guarantee that, but I think we will likely do it. There will be another one likely to reopen on Sunday. We will have the Motley Ides of Monday on Monday, and then sometime in the next few days, I will be posting some more in-depth stuff like what we did today for next week. And with that, I will bid you farewell. Thank you, everybody. Excuse me. I will burp as I depart from the room. Have a good day.